Bring in show music, please.
Hi, I'm CNBC producer Katie Kramer. Today on Squawk Pod. The clock is ticking for an 81-year-old president to make the case he can do another 4 years. Pennsylvania Senator John Fetterman joins us on President Biden's wavering partisan support.
If anybody comes with a, we need to take Gramps' keys away kind of a thing, I'm going to push back in the strongest terms because he is our guy.
And here's something to make the Federal Reserve take notice. Price increases slowed down in June. Economist Wendy Edelberg on inflation and our next, maybe, rate cut.
This is fantastic news.
Plus, what's going on with consumers? Bank of America's Everett Krisberg on the labor factor.
We are seeing some signs of a slowdown, but it's gradual. And we're seeing that in a couple of places. First, when we look at wages.
Those stories today and so much more, like Pepsi's prices and Apple in the EU. It is Thursday, July 11th, 2024. A jam-packed Squawk Pod begins right now.
Stand by in 3, 2, 1. Cue, please.
Good morning and welcome to Squawk Box here on CNBC, live from the NASDAQ market site in Times Square. I'm Kelly Evans along with Joe Kernan.
Welcome.
Becky and Andrew are off today. It's lovely to be here.
It's nice to have you here.
Running on fumes. No, I'm right.
Your groundbreaking afternoon show is still on today.
It is, but there might be an early departure.
A nap beforehand or something? Coffee?
There will be
tequila?
A nap, maybe.
Sure. All right.
You know, back in my youth, sometimes I would go do spin class after this, and then I go. Now I just.
Yeah, I believe it's pronounced Ute. Yeah. Cousin Vinny.
Should I mention now, because I don't really want to do it when later on
don't tell me, not another one.
No, Joe.
You've got 5. I mean, that's right.
The market call.
Geez. Oh my God.
I'm going to give you a victory lap.
Scaring me. I would have applauded. I'm Catholic. I wish I had 20. I really do.
People say that a lot.
They're the greatest, aren't they? And you showed me a picture of the new one.
She's very sweet.
God, people at home are going, they've got a cavity. They're going to, we need to.
All right. Now remember, in yesterday's session, the S&P closed above 5,600 for the first time, lifted by gains in big tech. All 3 major averages closed higher by about 1%. Shares of Tesla, they are one part of this, up for an 11th consecutive day yesterday. The stock has bounced back from a June 24th year-to-date decline of 27% to now a 5% gain. One of the most remarkable turnaround stories. Treasury yields, that's been a little bit more tame, back down 427 this morning, and of course ahead of CPI.
And the other one that had the similar thing, Apple.
Yeah,
$3.5 trillion. It's up $1 trillion in market cap since April.
But that's what people keep saying. Apple's breaking out. Amazon shows signs of breaking out above $2 trillion for the first time on the stuff.
Only tech, though.
I mean, but it's sort of like, well, would you rather not have it happen? I mean, in terms of just watching the technicals, not that I'm any expert in this, usually signs that this thing keeps going. You start having these breakouts happen. I feel like Mike Santoli would talk about that better than me, but noteworthy.
We never did get the breadth that we wanted, but that's not stopping things at this point.
It's so narrow now that it's March 2000 reminiscent.
Yeah.
You don't like those comparisons, but you go with the profit growth. I mean, we're at earnings season, they're going to have 30% profit growth versus 5% for everybody else.
And it makes you feel like something's not quite right, but that's just enough skepticism to keep it going. You're not really it's still not loved. I don't think. But not as bad as last year,
but you have the post-pandemic retrenchment with everything else. Whether it's, we'll hear from Pepsi. They're still having to adjust. They're going to have to pull back on price now. I mean, this is what's working. Thank God for AI. This is what's working.
And we just were talking about Apple. Well, there's some breaking news. EU antitrust regulators have accepted Apple's offer to open its tap-and-go mobile payment system to rivals, and the move will help settle a 4-year-long investigation that could have resulted in a hefty fine for the tech giant. There's a lot of, I'm not going to rail about Europe again, but I mean, if you can't beat them, regulate them and charge them for.
Charge them 10% of revenues. I mean, there's some companies like Nvidia or whatever. They don't 10% of their business isn't in Europe, and they still do.
They wonder why they don't innovate in Europe. And what was the last big tech startup? SAP. I mean,
their biggest company, innovative company, is probably Novo right now with the weight loss drugs. But on the tech front,
but not tech. But think of what's happened over here in the last 10 years. 15 years in terms of innovation and technology. I mean, if you were over there in Europe and you know, the land of, you know, great engineered cars and all these things, you would feel inadequate. You would feel inadequate at this point.
It's funny you bring up the car thing, because you think, well, what are their kind of national banner assets? Remember in the old days when it was Nokia, right? Okay, so Nokia, granted, that was the leader for a while. That era is over now. And then you could even say, okay, Volkswagen, they have world leading, you know, then they have their scandals. Now it's the Chinese EVs. I mean, it's got to feel a little existential.
Still Porsche.
Yeah, Porsche, yeah, Ferrari.
PepsiCo just reporting earnings. $2.28 a share, beat estimates of $2.16. Revenue coming in at $2.5 billion. That was slightly below, but the company said weak demand for its snacks and sodas, mainly in the U.S., was responsible, and that's its largest market. If you worked here more on Squawk Box, you would get a little goodie bag, and I got one yesterday. I'm looking. That's for me. It's more important than AI, and that would be a non-carb snack that actually is something that you want to eat.
Aren't we all looking for that? That's what, literally, look what I have. I have the pistachios.
That's what I've been eating.
That's what it is. That's your option.
That's all you can have, and there's a few carbs, but they're trying.
Their problem.
They're trying cauliflower, and I mean, they got the weirdest things. They're trying to, there's not enough lipstick to put on that.
And the real problem is price. You know what the average price of a bag of chips is nationwide right now?
I do not.
$6.60.
What do you mean?
Yes, $6.60. So this weakness, if it weren't for how weak
their shares... How do you know that?
Because we've talked to B of A, who's been cautious on this category, and Pepsi in particular, and some of their products, because these prices have gone up so far that on tortilla chips and Ruffles and some of these things, consumers are finally balking. And the discounting so far year to date is not working, and it's true for them, it's true for some of the other consumer packaged goods. Look what happened to Helen of Troy this week. So actually, if Pepsi weren't already down about 10% year to date, I think the reaction would be a little worse.
That is the biggest story of recent years, and that is that, after all these GDP numbers and all these good job numbers, if you're taking home in real dollars, real wages, less than you were 3 years ago, you can't tell someone they're supposed to feel good about an economy where they're telling their kids, yeah, we used to get that, but we're not getting that anymore.
So, $6.60 for a bag of chips. People go.
How about your mortgage rate, or how about your rent?
Well, and I think what happens then is, so for the companies, for the areas where consumers can push back, you have to pay rent. You don't have to buy name brand tortilla chips. So they're pushing back, and if the worm has now turned, this is what's going to make CPI interesting. The economy can survive. It's maybe arguably a good thing in the long run, but for these companies who have been enjoying all these price hikes and revenue increase and margin growth, it's a bigger
and you can, if you didn't take economics in school and you wonder why do people not like Keynesian economics, you can spend money, and let's say the pandemic's over and you continue to spend, and you get these GDP numbers. You get the GDP number, you get the good employment numbers, but if you get 40-year highs in inflation, that's the downside to juicing the economy through overstimulating it.
Not only that, the real GDP numbers, you can get big nominal. This is what makes earnings compared with real GDP so interesting right now. You can have nominal 5% revenue growth if only 1.5 of that is real GDP growth. Again, so yes, lately we've seen kind of real wages outpace inflation, maybe the past 12 months, but it doesn't undo the
cumulative. Is this going to be like this? Andrew might have to call in, I think.
Be like, guys, it's too
because
much.
If we're just keep
too much on inflation.
No, too much agreeing with
He's
Andrew.
Line one. Let's get to President Biden's reelection bid. Yesterday, Senator Peter Welch of Vermont did become the first Democratic senator to call for Biden to exit the race. He said he should withdraw for the good of the country and pointed to Vice President Kamala Harris as a capable successor. Axios is reporting Senate Majority Leader Chuck Schumer is privately signaling to donors he's open to a presidential ticket that isn't led by Biden. That report cites 3 people familiar with the matter. The senator responded to Axios following that report by saying he's made clear publicly and privately that he supports the president and declined to comment to NBC news. Filmmaker George Clooney yesterday said Biden should quit the race to give Democrats a chance at defeating Donald Trump. He had hosted a major fundraiser for Biden just last month, now writing in the New York Times that Biden should make way for a stronger candidate. And separately, the GOP-led House Oversight Committee issued subpoenas for 3 White House aides, requesting depositions to discuss the extent to which President Biden is personally carrying out the duties of his office and whether he is capable of doing so. In the 8 o'clock hour, we'll talk to Senator John Fetterman. He has called the abandoned Biden campaign dumb, says it only helps Trump. Although some have suggested look to his colleague, Senator Casey, who I believe is up for re-election this year, has been not perhaps saying quite as much.
Well, any of these individuals that you point to are looking at, in my view, cynically, self-preservation. All of them. They're all in areas where, maybe they're kind of purple areas. None of the safe people are abandoning Biden at this. It's all about, as it always is in D.C., it's always about self. Fetterman, who he has grown on me immensely over the past year, and I saw him down I have a picture of us together at the White House Correspondents' Dinner. He's in a black tie sweatsuit. I'm not going to show it because it wasn't. I don't know.
Did I see the sweatsuit with the white tie?
Yeah. But he's not going to mince words at all today.
But again, he's not facing re-election right now.
Right. But he's the biggest. He's probably the most outspoken. I mean, Nancy Pelosi. I'm going to ask. This is, to me, is just sort of nauseating to read. It's up to the president to decide if he's going to run. He already said in the letter, without any doubt, that he is running. Nancy, Speaker, you know exactly what he's saying. So the only thing you're saying here, it's up to him to decide. To decide what? It's up to him to decide to pull out.
She knows what she's saying, which is by saying this, I'm saying your decision is not
your decision
final yet. Yeah.
We're not accepting your decision to stay. The only decision we will accept from you is the 84-year-old Nancy Pelosi and the 85-year-old Steny Hoyer.
Well, and a lot of people are going back now over the past 4 years and saying, was the process not flawed, but was there a chance either in 2020 or this time around to have run a primary process that would have opened the door more toward a clear successor who could step in right now to that void? Some are even going so far as to suggest that he implied 4 years ago he was only going to be a one-term president and would step aside.
No, we know when this was rigged originally. It was in Clyburn, when Bernie. Suddenly, the specter of Bernie being the nominee hit the mainstream Democrats and Clyburn.
But I don't know if we call that rigged. I think we call that rational. I think they understood that maybe the path
I think Bernie might call it rigged.
Well, yes.
He's winning more delegates.
But I think the Democrats would say, look, and Biden did win. He was, so, well, that works this time around. Programming note, on Monday, President Biden will sit for an interview with NBC Nightly News anchor Lester Holt. That will air during a primetime special Monday night at 9 p.m. on NBC. Just one quick final word on this. Today, the NATO press conference will also be probably pretty significant moment. One of the opportunities where we'll hear him at least fielding kind of those off-the-cuff questions from media.
But you saw him on Morning Joe. You saw him give a couple of speeches on telephone, admittedly, but there's been nothing recently that's been different than what we've seen for the last year. Mm-hmm. I'm not saying that the debate was a one-off. I don't expect this big boy, I'm calling it a big boy press conference, I don't expect him to be any different than he's been. And I think he'll be okay, which will not quiet the people that want him out, but will probably allow him to
maintain the current.
And the longer it lasts, the clock is ticking.
Yeah.
Next on Squawk Pod, a bad debate versus a good economy? That's the question Pennsylvania Senator John Fetterman is thinking about on this critical week and critical day for President Joe Biden. The senator weighs in on the backstage and right out in front, divisions in the Democratic Party.
If I thought that maybe Joe Biden wasn't the guy, I certainly wouldn't be saying it publicly and putting it in the New York Times or in the Washington Post.
This is Squawk Pod.
Stand by, Joe. His mic, cue.
You're watching Squawk Box on CNBC. I'm Joe Kernan along with Kelly Evans. Yeah, it's unbelievable. 2 o'clock your show's on.
1
o'clock. It's over at 2. That's what I meant. That's what I meant. Our next guest has been one of President Biden's staunchest defenders following that widely panned debate performance 2 weeks ago. Joining us now, Democratic Senator John Fetterman of Pennsylvania. And it's a pleasure, Senator, to have you on the show. Saw you at the White House correspondents there. I almost brought up a picture. I took a selfie with you. You had a really fine-looking tux on. It had a hoodie and a bow tie was drawn on it. I don't know if you remember, but you were the most elegant.
I've been watching you for decades. We back into the late 90s. So
excellent. Since the debate, Senator, it's almost been like it looks like a sine wave almost, and I don't know what to use to measure what's going on in the prospects for the president, but I used some of the betting sites, and initially it had switched, it had flipped, and the vice president was favored. Then President Biden came out with that very strong letter and the call in to Morning Joe, and then he flipped back up. But now it seems like there's some wavering from some of the leaders in the party, and they don't want to say it out loud, but reportedly behind the scenes, there are some important Democrats that are starting to waffle a little. Would you at least concede that?
Well, what I won't concede is that Joe Biden is that guy, and that is his choice, and he's already made that choice, and he's already been very clear that he's going to get through the convention and through to November, and he's going to beat Donald Trump and all of that. And that's really a fact. Now, if somebody's unwilling to say that publicly, or if they want to say it privately, and of course this afternoon for this lunch with my caucus later is going to be, of course, it'll be spirited, but I'm going to be very proud to stand with Joe Biden, and I've been saying I'm showing up with brass knuckles, and I just want to stand with our president, and I think we're going to have some allies in that as well too. And for those that may have a different opinion, they're entitled to that, but I'll never understand how we could abandon a great president now, especially if to anyone that's watching this, I mean, of course, what's your network? I mean, I'd like to point out there, compare that to a rough debate. It's like the Dow Jones has been up 28% since January of 2021. NASDAQ is up almost 40%. The S&P up almost 48 and almost 16 million new jobs. Now, I can't imagine why somebody who's watching this right now would say, well, would I take a rough debate or this amazing economy kinds of statistics on that? Or would you rather have a rough economy and that he could have had a great debate? It's a strange choice right now, but my choice has been very easy, and it's going to be for Joe Biden.
I know that part of your calculus, and I agree with you, President Biden was one of your staunch defenders. You had a rough debate as well, and I think you're someone that is, at least knows what the president is going through at this point. But Senator, maybe the realities are that some of these donors that like to throw their weight around. I mean, why we care what George Clooney thinks is I haven't figured that out yet. Someone needs to explain that to me. But if you do lose donors, and if the poll numbers make it seem like somebody else would have a better chance for the Democrats to hold the House, the Senate, the presidency, does it become too difficult?
Polls are in flux. They change. And remember, anyone in 2020, Biden was up by 5 to 7 points. And I've been arguing at that time that this is going to be much closer than that. It's going to be very competitive. It's always going to be close in 16, 20, and of course in 24 and then. Now, if you've raised and supported the president, raised $28 million, and then turn around, it's going to take many multiples of that to undo some of the things if you want to go against the president. I don't agree with that. But for me, my point is that the president he's been our guy. He's won the primary, and there was an opportunity to run against them and make their case. And the only guy that did that was the gelato guy, and that didn't go very well. So here's where we are back now. And the question that I would ask to anyone watching this right now, the economy has been a banger under Joe Biden's presidency, and it's been incredible after a lot of people were thinking that it was going to be a cratering and it was a recession, and that's just not true. So what would you rather have, the kinds of an economy that Joe Biden helped brought us, or the fact that he had a rough debate, and nobody knows what a rough debate is like? after myself. And it's also it's a fact. Debates do not determine who's going to win. Whether it was Clinton, wiped Trump out. And of course, she didn't win. And of course, Obama really lost badly in a debate. And of course, he won. And even if you go back to Kerry as well, too, it's just not statistically meaningful about the debates. And if debates were that important, I wouldn't be standing right now at the rotunda talking to you as a senator. I would have a lot more free time in my schedule right now. And I'm proud to stand here for the president, and I'm going to do that later during this lunch. And I'm coming in ready to that, and I think we're going to have other people to defend the president.
Let me just ask this question on the public's mind, though, Senator. Is this really about a bad debate? Didn't the debate just tell us who the man is? That's why people are so upset. Everyone has a bad debate. A bad debate's not that big of a deal. The big deal is whether the president is capable of doing the job now or would be in 1, 2, 3, or 4 years' time.
All I can say is it's where he is right now. And I spent a whole day with the president. We went all across Pennsylvania, multiple events, and he was sharp and he was fully engaged. And now when you get outside of that kind of a bubble, people were thrilled to be with him. They were, in a line to have a selfie with him, and they were cheering. And these weren't, they were organic, and I witnessed that. Now, of course, if I thought that maybe Joe Biden wasn't the guy, I certainly wouldn't be saying it publicly and putting it in the New York Times or in the Washington Post. But right now, here we are now, I was with him, and I am proud of him, and that's why I'm here talking to you today and in other kinds of outlets to just let people know Joe Biden is our guy. He should be our guy. And quite honestly, he deserves our support throughout all of this, and I do believe he's going to win. But of course, it is going to be close, even though it has been, and that's going to continue.
He's got the delegates, Senator, and he went through the normal channels of how to do things, and it theoretically, it's his choice, and he would have to be talked into, I think, not being the nominee. But just listen to this for a second, Senator. Former House Speaker Nancy Pelosi, we all read the letter that President Biden said. He is committed to being the nominee. So why would she yesterday say it's up to the president to decide if he's going to run?
We're all encouraging him to make that decision because time is running short.
The code is she's saying we're all waiting for him to make the decision to drop out. So he's lost Nancy Pelosi, and supposedly Schumer is murmuring the same kind of stuff behind his back at the same time. Do you think eventually that your side on this and the president's side will win?
Well, the president has made that decision on that. And of course, she was an accomplished speaker, and she's absolutely entitled to have her opinion on that. But I just don't, I really don't agree with all of that. And if anybody this afternoon comes with we need to take Gramps' keys away kind of a thing, I'm going to push back in the strongest terms, because he is our guy, and he has run an amazing term as president by any metric. And as I said, I have spent time with him personally, and I've seen that, and I believe he's going to win. And I would much rather have a guy that didn't have a great debate versus the other guy that had a debate, and most of it was lies and bizarre and unhinged.
So, Senator, I think a lot of the public is thinking through as well the issue of, okay, if something happens to the president, or if he's not capable of serving out the term, that leaves Vice President Harris to step up to the job. Would you feel comfortable with her in the elite? I mean, this is the biggest moment ever for her after what we've all seen about what's going on with President Biden. Is she ready for this moment?
Well, the vice president is very clear. She's all in on for Joe Biden. And I'd like to remind everybody that he appointed her as the vice president because he knew that she was, God forbid if she has to step up and take that job. And I do believe she would make an incredible precedent, but I don't think that's her moment right now. And now she has said anything to contradict that. So we have an amazing team. And if anyone's more inspired by the vice president to be at the top of the ticket, you're still voting for her if you're voting for Joe Biden. And I haven't met a voter that says, well, I'll go with Trump It just doesn't make much, because again, Joe Biden has made these incredibly great choices, and that's why we have the kind of ticket that's ready to roll and get us through into November through this incredibly difficult election, but he is going to prevail.
Senator, we've only got about 5 seconds, 10 seconds. Do you think David McCormick, what about the other Senate race? Any comments on that just real quickly, 10, 15 seconds?
Yeah, well, the last thing is, like, Joe Biden's my guy. Later today, I'm going to show up and I'm going to remind people. And I think I'm going to have allies in there, but I'm going to be, and I'm not going to change that. And I want Joe Biden to know, this is his choice. He's already made that choice, and I have his back. And we all should have our back here. Right. And if any kind of our party decides to try to push him out, then that could become the party that is going to deserve to lose.
I appreciate your passion on that, Senator. It's good to have you on today. Thank you very much, and we'll be watching. Thank you.
Going to be interesting. First, they've got that meeting with the Senate, Biden's at 5:30, the NATO press conference. The big boy press conference
that they keep talking about.
Cheese will be next.
Coming up next, inflation has been the word of the 2020s. We're reading a few key economic signals. First, what Bank of America's data tells us about consumer spending with head of the B of A Institute, Everett Krisberg.
There is some deflation going on in the travel space, but volumes are picking up.
And then the latest read on consumer prices. A slowing inflation rate is just one more factor for the Federal Reserve's next decision on interest rates, to cut or not to cut. Economist Wendy Edelberg.
The economy is in a great place, and the Fed should absolutely be considering cutting right away.
Or not. An economist on the other side of things, Joe Lavorgna.
We have 4 bad months of inflation numbers. Now we've got 2 good months. So to me, July is too soon.
Squawk Pod will be right back. Welcome back to Squawk Pod from CNBC. Today with Joe Kernan and Kelly Evans. Here's Kelly.
Bank of America releasing its July consumer check. This is what we need right now. The July consumer checkpoint. Tell us what exactly is going on with U.S. consumer spending and financial well-being. We've had a lot of mixed corporate results lately, for instance. But the survey finds overall spending for household this month. So far, last month.
June.
Okay. Overall household spending for June down about 0.5% after 4 consecutive months of growth. And also, how about the Taylor Swift effect? There was a 23% increase in spending in cities where her Eras tour took place in Europe in June. Joining us now is head of Bank of America Institute, Everett Krisberg. It's great to see you again.
It's great to be here.
So the context for us, we're going to get the CPI a little bit later today. Everyone trying to figure out, we heard from Pepsi, Delta, some kind of, what do you think is going on with the consumer?
So I think, as you said, in June, we saw overall card spending down about 0.5%, which was the first negative print after 4 consecutive positive ones. But kind of let's take a step back. We're going into earnings. If you still look at the second quarter overall, consumer spending per household was up 0.3. So not sounding the alarm bells quite yet. And when you look at the composition of what was going on in spending, we continue to see services outperforming.
Is all of this
retail.
Real or nominal?
Well, we'll see. We'll see at 8:30, right?
Yeah. But in other words, when you say it was up for 3 months and then down, that's not inflation?
It's not inflation adjusted.
Okay.
Correct. It's not inflation adjusted. But I think one of the things that really jumped out to me in the numbers is travel. And if you look at the travel numbers in terms of the number of people who are traveling, it is booming, both domestically and internationally. And remember, last year was supposed to be revenge travel, summer revenge travel. Well, if you look at the number of Bank of America households that are making transactions abroad, in June it was up 6% over last year.
You know what's striking to me is the number of U.S. households that now have a passport, right? We all got used to this idea. I forget, 10 or 15 years ago, only 12% of U.S. households. Now we're up to like 50%. I mean, something like that. It's really been a striking change.
Yeah, it has. And what hasn't really changed is where people are going, right? So based on our data, they're still going to Mexico, Canada, UK, France, and Italy. But the Olympics are coming up later in this month. So we expect to see that again continue. And they're also traveling domestically. So when we look at the number of households who are making transactions outside of their region, that's also up, not as much as the international travel, which is up 6, but up a little over 3%.
And it's kind of ironic that Delta is a flip side of this. There's so many seats. There's too many seats. There's pressure on fares and so forth.
Well, I don't know. I actually think it's somewhat consistent with the story. And Joe, somewhat consistent with the fact that every person is in the lounge with you, right? Everyone is traveling.
There's sneezing in the buffet. There's no sneeze thing either. I told Kelly, it was, when Groucho said it was fun, a lounge that will accept people like me, I don't want to go into it. I don't want to be there. They need a higher standard than that, so, no thank you.
Because then you'll be alone in the lower one.
I would get a passport if it was like Italy only. That's really, if I could get one.
Well, there are a lot of
Are there
people,
things like that?
I don't know, but we can talk to policymakers and figure out how we can get that to happen for you. But going back to what we're seeing in the spend on the travel side, is actual travel spend was down last month, even though so many more people are going. And again, we'll see at 8:30 what the updated CPI numbers are. But if you look back in May, airlines were down almost 9%, car rent 6%. Yeah.
Wow.
Car rentals were down. So there is some deflation going on in the travel space, but volumes are picking up.
You said deflate. I talk about this sometimes. We talk about potato chips and things like that. And people are like, what are you talking? There's e-commerce deflation. There's furniture deflation. There's apparel deflation. Like you said the D word, and it doesn't mean that we're undoing the 20% hikes of the past 4 years. But what it means is for companies who are dependent on this, it's a massive problem for them. It could mean layoffs if they don't right size.
Well, let's talk about, you said layoffs, so let's talk about the labor market, because that's obviously been a big topic of discussion over the last 2 days. So what is the Bank of America data telling us about the labor market? We are seeing some signs of a slowdown, but it's gradual. And we're seeing that in a couple of places. First, when we look at wages, and Bank of America Institute, what we look at is the money, after-tax money actually coming into accounts. And what we're seeing there is we are seeing wage growth and income growth across lower, middle, and higher income households. And lower income households continue to be going up at the highest rate, about 3% in June, but that is lower than it has been over the past 2 years. So their lower income households are up 3%, but they were up 4, 5, 6.
Exactly. And I guess when we then hear from, trying to think of some of the blowups we've had lately, I mean, some of these companies who are talking about the consumer's choosier, the low-end consumer, and the macro people who say, those excess savings are running out and things like that. I mean, does this paint that picture for you?
I think we're seeing the labor market cooling, but very gradually. And in another area where I would just kind of point that out, we can also understand when people are changing jobs. And we had the Great Resignation when everyone was changing jobs, and people who changed jobs were getting very significant pay bumps. Well, when we last looked at this, we had about 3% turnover. So about 3% of our consumers were changing jobs. But the amount of money that they were getting when they changed jobs back in the Great Resignation was north of 20%. It's less than half of that now.
Wow.
So job changers are getting a median bump of about 10%, which is not insignificant. But it's not necessarily going to drive the same consumer behavior.
Great point.
As when you were getting more than double that.
All right. No further questions.
No further questions, Your Honor.
Liz, thanks.
Great to be here. Thanks,
appreciate it.
Following that discussion, the Labor Department released the Consumer Price Index, a measure of costs for goods and services across the economy, and a key inflation metric for the Federal Reserve. It turns out price increases have slowed. In June, CPI declined 0.1% from the month before, putting the 12-month rate at its lowest level in over 3 years. The core CPI, which excludes volatile food and energy costs, ticked up 0.1% from May and up 3.3% from a year ago. Both better than expected. That 3.3 number, it's the smallest annual increase since April 3 years ago. It's good news. Enough, maybe, to prompt the Fed's first interest rate cut since the pandemic. Joe and Kelly digested this headline and its impact on the Fed's upcoming decision or decisions with Wendy Edelberg from Brookings and Joe Lavorgna, chief economist at SMBC Nikko Securities America. We'll start with Wendy.
I think the next meeting's on the table.
You do?
I do. I mean, they don't like to surprise markets, and so that would mean it's not. But if it weren't for that, this is fantastic news. Core CPI over the last 3 months came in at 2.2% at an annual rate. The labor market is at a sustainable pace. Consumer spending has slowed even as real incomes have risen. I think the economy is in a great place, and the Fed should absolutely be considering cutting right away.
Would that look, I've argued both, more or less political if they did it even earlier?
That is way outside my lane.
I was thinking September's too late because it doesn't help the economy, but it does look like an easy. July could even be better because it actually might help the economy between now and the election.
I have absolutely no doubt that the Fed does not have this on its mind.
What do you think, Joe?
It looks worse to me. I mean, Powell was very smart, Joe, last December in verbally pivoting and then going on 60 Minutes like Bernanke had done in 09, I believe. Maybe 09 with the green shoots. But anyway, the point is he prepared the markets for an ease and said, look, I told you back in December we had to do it, and then we have 4 bad months of inflation numbers. Now we've got 2 good months. So to me, July is too soon and September is too soon, unless the labor market really falls apart. Just because I don't think it's, well, one, the equity market is rallying and it's made financial conditions extraordinarily easy. So you're easing and arguably just further adding to the bullishness and euphoria in stocks. And to Wendy's point, right now the economy, I think I'm negative on the economy, but she makes a very good point. It's holding up. Labor market looks better balanced. Why are you rushing to cut rates unless it's absolutely compelling? And in that regard, a certain someone will likely be yelling about rate cuts and everything else. So I would
But you're
wait.
negative on the economy? Don't you think they should cut then?
But I'm negative on the economy because the things I look at tell me we're going to soften. The Fed doesn't put emphasis on those variables. And I think the inflation's a lagging indicator. But my point is that I do think it's got to be really compelling so the Fed could be above reproach and not be accused of helping, one side or the other.
And that is Squawk Pod for today. Thanks for listening. Squawk Box is hosted by Joe Kernan, Becky Quick, and Andrew Ross Sorkin. Thank you to Kelly Evans for sitting in. Tune in weekday mornings on CNBC at 6 Eastern, or follow Squawk Pod wherever you get your podcasts. If you're a longtime listener, let us know what you think. We're on X at Squawk CNBC. That's it. We'll meet you right back here tomorrow.
We are clear. Thanks, guys.